been a tough go of it recently for the Magnificent Seven stocks. Nvidia in particular fell about 1% yesterday. It struggled to recover since dropping 15%. Joining us now is Michael Sansoterra, Silvant Capital Management CIO, Managing Director, and Senior Portfolio Manager, joining me here in the studio. You know, we always watch Nvidia really closely, and like yesterday just felt like Jensen Huang Day, right? He was in Washington, he met with the president, he met with Congress, he gave a fireside chat at a think tank. Oh, and by the way, yeah, he was also on Joe Rogan.
Right.
So, you know, as an investor in Nvidia, and I know you are, you know, are you comfortable with this level of like sort of visibility on the part of the CEO?
We're comfortable with that. You know, we've seen this before with Steve Jobs, to a lesser extent, with Bill Gates. You know, there's been these sort of larger than life CEOs in technology for years, and he's obviously the new generation of that. So, and that's been going on for a few years now. Yesterday was a big day, even in the score of big days,
right.
As far as once you're on Joe Rogan, I think you're close to jumping the shark as the amount of media attention you can get in one day.
Although I wonder, like, how many people who listen to Joe Rogan hear Jensen Huang and they're like, who?
That's a good question.
I don't know. I don't know. I mean, we all are steeped in it, but who knows?
Right, exactly. Probably not as many people as you think, right? So I think there's, I'm not surprised by that. It's been good public publicity for the firm, and obviously the investors know it well. The question really is it going to be effective in changing the behaviors, particularly due to China, right? I mean, it's one thing to go out and pound the table and say we really have to do this. It's another thing to actually do it.
Well, and it's really interesting because the market seems to have moved on from China, right? The market seems to have priced out the possibility that they're even going to get that revenue back at some point.
Well, we've seen the on again, off again a few times, and I think at that point, once you have the off again sort of stall, which is basically what's happened in China, there's no reason to expect it. So it would be an upside if it would happen, but you're right, nobody's modeling it, no one's expecting it.
Well, do you think then that Jensen's energies are well spent on lobbying so hard for this China revenue?
They probably are. It's still the second largest market. It's still a huge, important growth engine for any company in technology. So to be shut out of it is to cede that market to competitors. So I think it probably does make sense. It's a long shot, but he's got to press it.
I want to zoom out a little bit. We just got a report from Bloomberg that Meta is considering trimming down its Reality Labs efforts, its metaverse efforts.
Right.
And I can't help but think about, you know, here we were, 4 years ago when they were kicking it off, and it was such a big play. And guess what? Jensen Huang was also talking a lot about the metaverse as well. And it hasn't really gone anywhere. And you think about the parallel today when such huge amounts are being spent on generative AI. There's always a risk with new technologies that you're not going to get the adoption that you think.
Right.
How do you think about that potential risk here?
You're right. So if you back up and think about a few years ago when Meta changed its name and changed its stripes a bit, they started spending and the stock underperformed for a period of time. And they started peeling that spending back about a year and a half, 2 years into it. And then the stock did a little bit better.
Right.
And it reminded me of some of the moves that Amazon made in the early 90s when they were heavily investing in distribution, in technology, and they'd have these moments where they missed the quarter on earnings but had good general revenue, but they were spending hand over fist. And there would be certain investors that hated that and certain investors that would ride through it. But if you backed up long enough in a big enough picture, they still dominated their space. Meta continues to dominate the space of social media. So when they started pulling back in Meta then, I thought, okay, that makes some sense. To say that they're cutting more of it now and the stock reacting positively is just a reminder that they need to be cognizant of how they're spending their capital, and they need to be, that CapEx has to be focused on what is actually going to work. And I think they probably got a little too far over their skis a couple years ago. They knew that then. They're continuing in that vein of cutting spending in the Meta portion, and they'll continue to pump it into AI. And you've seen the AI capital spending from them has been fantastic, but it's also been giving them return on invested capital.
Right. I guess that's the big difference is Reality Labs continues to lose money even now.
Right.
So as you think about how to invest in AI, are you sort of over-indexed to a player like Nvidia? As you think about your strategy around it?
We go company by company, stock by stock at Silvant and in the Virtus Silvant Focused Growth Fund. So our goal is really to find the places where we think that growth can exceed investors' expectations. That still does sort of take place mostly in semiconductors, but there are now some software companies, Palantir, AppLovin, that are benefiting directly from AI. And we're starting to see the very beginnings of some corporate use of AI showing better corporate profits when the tools are actually providing ROI. So we've got a multi-pronged approach. It's got semiconductors, it's got services, it's got electric power generation. We've really focused on all the pieces of AI, but it's been at a company-specific level, less so a strategic target to touch everything. We just want to find the companies we think that can continue to exceed investors' expectations. Those are the ones that typically outperform.
And it's interesting that you mentioned energy, because that's something Jensen talked about in his comments yesterday as well, that was a place where China is ahead of us in its energy generation.
The demand for energy from AI is greater than the grid can support over the long term. So there has to be solutions, both natural gas, nuclear, over time. That will be a limiting factor to some of the hyper growth you could see a couple of years from now. We're just sucking up that energy and water too for cooling. So there are places to invest there that I think longer term will be surprisingly strong given the length of the AI cycle.